Hey, it's Mike with PriceActionTradingSystem.com, and it is Monday. It is April 27th. This will be our chart lesson for the day. And before we go over the chart, I want to go over, like I've been doing, I want to talk about a few little quick things, and I want to talk about a few quick charts. I'll try to go through those a little quicker and spend more time on the chart. This was a hard trading day for the average person, and I'll explain that when we come back to it. But let's look at a couple of other things first. Okay, this is relatively simple. Um, this this trader sent me back this chart that I talked about the other day, and notice you got a new high and a first entry and a second entry. And I get this a lot, and that's the reason I'm going over this again. The signal bar is this little red bar right down here, but it's not really. I mean, it's fairly bullish, so it's one you might take, but it's not a perfectly bullish bar. And so sometimes people think that because that bar is not good enough, if the next one beside it is good enough, then that's your signal bar. And that's what this trader, if you read what he said here, since this bullish bar is the signal bar and the buy order should be one tick above that bar, it looks like it would have been filled. Anyway, he's basically what he's thinking is that since this one wasn't bullish enough, then the next bar would be the signal bar. Well, that's not the way it works. The signal bar is always the highest or the lowest bar in the swing, and you can't use it in not, that's what determines the signal bar. It's not whether it's bullish or bearish. Yeah, this bar is bullish, but this is not the signal bar. This is still the signal bar. This one is probably bullish enough to enter on, and your entry is one tick above that. If you can't enter there, you can't wait and enter above this bar. You're too late. Just as you talked about here, you missed all the move, because that's a pretty big move there, and then it turns down. So you're correct partly, but you're missing the part that your signal bar is here, and this never changes. Even if it's not bullish enough, you just skip the trade. There is no trade. You can't enter later on this bar and say, well, okay, well, this one's bullish, so this is the signal bar, because that's exactly what happens. This ticks one tick higher and then turns down, and you've missed all the moves, so to speak. So on the first entry, this was actually your signal bar. It actually broke lower and turned up. This actually turns out to be the lowest bar. Actually, you don't end up really getting a swing low there. This is all one move down. Notice how you just keep making lower lows and lower lows, but that's still a break higher. So if you were looking to go long, you could still count that as this is a second entry long, because notice you're moving down first entry, you're moving down second entry, and you can see you had a leg down, a correction, and a leg down. So you don't see a real correction off the low to a higher low, which is what you'd probably want to see on uh, your first entry to make it a good one. Notice here that we actually go higher. So assuming this didn't break higher yet, this would be your first entry, and you did make a higher lows up through here. Notice that bar is higher than that bar, the low is higher than that one. That's what you would like to see there on the first entry, but it didn't happen. But that's still a second entry no matter how you look at it. So I hope that's clear. It's not arbitrary what your signal bar is. Your signal bar is always the highest or lowest bar in the swing. And so right here, this is your signal bar, because that's the lowest bar. Actually, you got a two bar matching low, but the one it breaks above was this one. So this is still your signal bar here, and that's just a first entry, because you got a new high right there. So it comes back and you get a first entry, it makes another new high. First entry, but hey, it doesn't make a new high. Second entry, and then once you start to get past the second entry, then you're trending in the other direction. So you start looking for shorts, counting off the lows. So it's really not that complicated, but people get it all mixed up. And so hope that's clear on that one. Okay, here's another chart a trader sent me. And he was asking about, I'm not sure how you pronounce it, Hanky, Ashy bars, I think is how it's said, Hanky or Hanky. I'm not even sure, Hinky. I'm not sure how you'd even pronounce it, Hinky, Hanky. It's a different kind of Japanese candlestick. But he said he likes it because it smooths things out. And so I just wanted to bring this up because I hear this occasionally. People want to use range bars, or they want to use two 2 minute time bars or 3 minute. we've done all this for you already. We have this down to a science. So I know a lot of times people want to try to use things they've learned from other places in the past, but if it didn't work in the past, it's not going to work in the future. So again, we have this down to a science. The you want to use tick charts if you got them, and you want to use, if you're trading the ES, you want a 2000 tick chart. This is actually the euro, I think. So I believe I've traded the euro some long ago, and I believe it's about 1,000 tick chart. So he's using a 233, which depending on what kind of data he has, I would think this is way too small because you're going to get way too many swings in there. I can't remember why he even said he was asking about this trade here, but notice your new high, your first entry. There's a second entry right there, but your signal bar is this little bearish bar, and it's too bearish, so you don't want to go long there. And then this is a third entry long when it broke higher there, and then finally it breaks higher right here on a fourth entry long. You could look that you have a little bit of congestion there and treat that like a failed break lower and go long there. But there's no short here really, because the trend is up and your trend line's working right along here, and you're just working back to the trend line. So you're just waiting for it to come back to the trend line and then go higher. That's basically what you're doing there, but that's just a trend back. And so I hope that's clear. And the main reason I showed this chart was just to talk about the bars. Don't try to change things up. We've done all that for you. We spent years working on this, and we got it down to a science. If you trying to change it up generally is only going to slow you down and cause it to fail. Most of everything you've learned is wrong. And I know people don't like to hear that, but most of what you've already learned is wrong. And that's why you're not having any success, because it doesn't work. Don't believe. I know you'll read the same thing at every forum you go to, and you'll even read some of this stuff in books. I mean, sometimes I read a book by supposedly I don't read trading books anymore, but I've read them in the past, and I can remember reading something and I was thinking, did I really read that in that guy's book? Because he's supposed to be a real trader. And then I go back and read it now that I know better, and I'm like, I just cringe. I'm like, he's wrong. He doesn't know what he's talking about. So don't believe everything you read, even in books that are supposed to be by people that know, because it's just amazing how much wrong information. But if you heard it in a forum, or somebody sent you their little trading strategy that they got from somebody else or from some forum, I'm just telling you, forget that stuff. And here's another one this trader asked me about. He got this one right here. Notice your new high, because it's higher than that swing right there. So you have a new swing high because it's higher than the previous one right here. So you got to count 0. Come back first entry, and then you pull back second entry long right there. That's not a great signal bar, but it is a second entry long. I mean, that's more of a neutral bar to almost bearish. You could treat that. Notice you got a new swing low right there. So you could treat like a first entry, second entry. And so right there, I wouldn't have any problem going long with it regardless, but it's not a good second entry. But it is a second entry and a failed second entry. Your better entry is probably this higher low right here. You just need enough room to get out. I don't know if there is or not. It's close, but if you had enough room, I would say that's your better entry. But I wouldn't have a problem with that one just because it's a trap and it is off the key entry point. So, and notice it takes it a minute, but it moves on off. Now he asked me about this one, and you just come back, and that's just a first entry. So if you're counting off the lows, there's a first entry, second entry, third entry, fourth entry. That's a fifth entry. So again, what happens if you get past your second entry, which is right here to the downside? It means you're trending in the other direction. And you could draw a trend line right up through there, and you get your break, move to a new high, and then it corrects. Perfect price action, even on this chart. And this brings up another point, because this guy's trying to count ABC patterns and ABCD patterns, and trust me, forget all that stuff. Forget it. It's useless. You're looking for stuff to happen at these you're just looking for, you got to find the key entry points, and you're looking for prices to come back to them, and you're looking for reasons to enter. That's all that matters in the end. Forget about everything else. All right, I wanted to show this one just because this, I believe this is, man, what did he tell me this was? I think he told me this was, this is the 6E, so I think, I forget what, I can't remember if this is the Euro. I'm trying to remember what the 6E, I'm pretty sure it's the Euro, but don't quote me on that. I hadn't traded in so long. Some of those Forex or futures, I'd never trade Forex, but if you want to trade currencies, this is the way to do it in the futures. Don't try to use. I know a lot of people try to use Forex, but I'm just telling you, don't do it. You'll never win. I've told people that, and they didn't believe me, and then eventually they came back and said, you know, I started trading it in the futures, and suddenly I was making money. It's because you're trading against your broker, and I don't care even if they tell you they match you with other traders. They still see your orders. They still match up orders in their favor. It's rigged against you. Don't try to trade. Please do not try to trade Forex. And spread betting is even worse, so don't try it because you're at a huge disadvantage. It's not regulated well enough, and the way it works, it's rigged against you. It's like the old bucket shops. If you don't know what a bucket shop is, go Google that, because that's basically what it is. It's like the old bucket shops before they outlawed that here in the U.S., where you could go in and bet against the market, but you were betting against the actual brokers, or really the bookies is what those guys were. And Forex and spread betting they're basically bookies. That's what they are, and they don't lose. So they rig it all in their favor, and they can see your orders. They know where your stops are, and they can match up. They might even tell you, well, we match you with other traders, so you're not trading against us. But really, they match you the way they want to match you. So just be careful with those type with Forex and spread betting and stuff like that. But anyway, I got off on a tangent there. Somehow I always manage to do that. But I wanted to show you this chart. This is the Euro chart. And you can see that we trended up and we went into a trading range. And this guy I think he took 4 trades here. And they're all pretty good trades. He took a long right here. It's a second entry long off a double bottom. But even more, this is much more than a double bottom. It's a range, and you can see how many times we bounced there. And then he got this second entry long. Nice trade. And I think his next one was, he took a second entry short right here. Notice you got your new low, and first entry, second entry, you got a lower high. This is the one, I'm not as crazy about this one. Just simply because you've got a lot of resistance or support there, and you got the EMA right below it, and you're not quite back up to the highs. See where his line is up there. He's close, but not really. So I'm not as crazy about that one, but it's still a second entry short. He's going short off, pretty much off the highs. I would have probably waited there. He says second entry short, double top with a lower high, top of range, and he does notice the lower high. And that's a pretty good signal bar, but it's an inside bar, and that one's bullish. That's just like an up-down bar, and then you got another inside bar. So that's not a perfect setup, but it's not a bad setup if you're watching. So his next trade right here, and again, he's working down. He actually shoots down past his low, so you got a little failed break lower. So I'd probably been looking for a long here, but still he gets a first entry, second entry. And you did have a trend line working down here, and that's your first break. So you might expect it to try to test that low again, but I'd probably been looking for a long and probably skip that one. But again, it's a good read. You got a trend, it's the first break, it's a second entry short, it's a lower high, it's a nice bearish signal bar. It's not you got enough room to scalp out. Wouldn't be afraid of that trade, but I would have been thinking long and probably waited and took that long right there. And then he does see that one, double bottom at low of day, just had trend line break with a retest of low. Technically a second entry long, strong signal bar. and you got a new high. So first entry, second entry, that's the one I like. You can't see his chart after that. That's the end of it. But you can tell you would have got an easy scalp out of that, because that's what you're expecting for it to at least go back to the EMA. So nice trading. But really the reason I showed this chart, I just wanted to show you that this is the euro, and this stuff works in every market. You see the same thing. He's trading. Can we see what chart he's trading here? He's trading a 400 tick chart, so that's a little better than the 233. This actually looks pretty good. I don't see a lot of failed fake outs or anything like that, so I actually see some other trades on here too, but nice trend up. Anyway, wanted to show that and just show you that it works in other markets the same way. And one last one for my friend here that's trying to work on his trend lines. I see why he drew that right there, but the main thing, I'm going to pause this. Okay, I moved this over to paint, but he saw the resistance across here, which that's good. So, and you can see we're kind of going flat here. We're back and forth above and below the EMA. But he drew his trend line. I don't know where this thing starts down here, but really, I mean, at the very least, I can't see all of his chart, so I don't know if that's his start of his day. It looks like 6:30, so that's not really the start of his day. So I'm assuming the rest of his chart's just not on here. But anyway, I probably would have started right there on this. Oops. Let's just see. I mean, always start at your low swing and then work off your next one, closes. And you can see that looks much better. That's your channel going up that I probably have on my chart. And there's probably even a midline in there. What do you know? Right there. I mean, there's not any probably to it. There is a midline, because I believe that's the way I have my chart. It's pretty close if it's not. And you can see where we turn down each time. Notice how every time we get up here, we come back to here. We go back to here. This time we didn't get back. We hung around the midline and tried to go higher. We ended up coming back down. This is your range here. So now we're ranging. He got that part right, which is good. But he's taking his trades right in the middle where most of them are going to fail. Your trades are going to be down here. You're going to be looking for longs down here and shorts up here if you get a setup. So that's the way you play a range. Now, if you got a good trend in the middle, if you got a good trend coming down, you may take it if you get a setup, but you got to be careful because you'll have more failures. But notice he had a low, first entry, second entry. So there's a good short right there. Second entry short coming off the highs. So you didn't even need the trend line yet, but that sets your trend line. Then look here, you got another low, first entry, and then second entry. That didn't really go higher, but notice you're coming down. You made a low and it corrected, and then it came back down. That's still a form of a second entry right there, off the key entry point. This is one of those that triggered. It actually came down, then it went up and came back down. So your second entry really triggered right there. It's not a perfect second entry, but if you look, it moves up, comes back down, moves up, and then comes back down. So that's still a second entry there. Then you got another entry, not very good, and then another one right there. But you got to draw these short-term trend lines. You know who's, I don't like to call any names, but the gentleman will hopefully he's watching, and you see how I'm drawing your chart here. Draw these short terms. There's another one right up through there. And look, prices are working up that. You get your break and a new high. So then you're expecting it to turn down. Right here, you kind of get a little spike and channel down, and it's working down. And you get a break, new low, and then it's going this way. And then you got one working up, You get a break, new high, and then it's working this way. Oops. You get moving down, you get a break. It tries to make a new low, but this support right here holds it, and it goes the other way, and it goes an equal distance, and then turns down here. Notice you're working down, gets a break, and then it comes back down, makes a new low. Actually, just starts this new trend line down right here that we just talked about. So anyway, I hope that's clear. You got to draw these shorter term trend lines. Got to. If you don't, you're guessing. You're just throwing darts at a board. Yeah, you need the bigger one, but you got to hone into these shorter term ones to really stay with this. And right in here, you're more sideways, and you really need to be playing the range, but you still have these trends within. You've got a trend working up right there. And so it'll help you if you draw these on here. And you can even get smaller than that. You got a shorter term one working right through there. And then right here, you got a little trading range right across there. So draw these smaller terms because it's really, really going to help you. Same thing right here. Look at that trading range. You're stuck in a range right there. You get a little failed breakout, and you end up going higher. And what does it do? It fails and comes back. Then it fails out this side a couple of times, and then it finally takes off. And notice it's still actually coming into play way back over here. Notice that resistance still holding, and that's it. If you don't have this on there, you don't see it. It's so much harder to see, so you got to draw this stuff. Please draw. Practice it every day. Okay, one last thing that we're going to talk about this chart. Actually, this is going to be on this chart, but a trader asked me, why did it sell off late this afternoon? Why does it sell off a lot of times late in the afternoon? Well, if the market's trending up, first of all, notice that we were in this range, and if you measure this range, see how wide that is, and then you move this up here, and then draw your line. There's your target. If we're going to get an equal distance, and guess what? We went. I don't know how well you can see that. Let me back out. We went to the tick to that line, and it sold straight off. So that's the first reason it sold off, because we're just going up and down in this range, and it finally met its target at the high of the range. But there's also the channel it's going up and down in, and we notice we didn't quite get up there on that, but it was because the range actually took precedence, and that was really the target, and we came back down. But you can't ignore this trend channel, although it's mostly flat all day long. You've got a combination of a trading range day and a slight uptrend, but this was a really hard channel to find. I drew it early on, but when we broke here, I just assumed it wasn't any good anymore. I should have left it on there, but I just was trading the range at that time. But when it came back and touched again here, you had to assume, hey, maybe this thing's still in play. And you put it back on there, and you see it came in play several more times. And and you can see the midline coming into play on both sides. Notice how it's acting as support and resistance all the way up there. And then we finally get above it, and look how many times it acts as support before it goes up. But we still can't make that high. We just get to the range, and it sells off. And where does it find support on the way back down? Right off that original trend line right there again. So this was a little harder to find. I didn't think it was valid early on, or I'd had it on my mid-morning chart, but you didn't see that on my mid-morning chart because I didn't think it was any good. So let's just move it out of the way and look at it now. You can see that it's definitely a clear range across here. And of course, you're expecting the possibility to get a short up here. Even if the key is, though, you got to wait until this move is over. And you get a setup. So let me back out here, because I guarantee you, I've already gotten a lot of emails about all these failures in the middle, but see how we're just going sideways? You're going to get chopped to pieces trying to trade a second entry in there. Just forget it. So the key is just to wait till it gets to here and then start looking for a setup. And notice that trend line I drew up through there fits perfect. Finally get a break, comes back and tests this, it moves to a new high, and then it sells off. It comes back here. Of course, there's a midline right in here that it bounced off here and here, and of course you may not see that. You may not even see that at this point yet, but it didn't matter. You're waiting for a setup up here, and you just really never get one. Generally you want to wait on a lower high or something, because look how far away we are from the EMA right here, but yet it just keeps crawling right up that trend line until you finally get a close outside and it tries to go higher and makes a little double top and a big bearish bar. Well, now you got a double top and a lower high. Double top's basically a lower high because it couldn't go higher. And look how far away you are from the EMA. And now it's outside your trend line too. It could try to go back and still make that extra tick and get a high, and it actually does, and it fails. So that would have been the place to go short. You get a failed second entry long here, but I don't think I would take that right into the EMA, not when it's been 3 times. It still works, but this is where you had to enter. So you got to be careful. Notice you could have gone short right there and you got burned. So just because you get the breakout, it's probably going to fail, but you still have to time your entry properly. So don't just start taking a short because you see a bearish bar, especially when they're starting to go sideways like that, because you just don't know what's going to happen. And that's exactly what usually happens, is it turns down a tick or two and stops you in, and then reverses and stops you right out and keeps going. And a lot of times it will stop you out, run back up here and stop you out, and then turn around and go straight down. So just, you got to be patient. If you miss a trade, I mean, I was trying to get short right there myself, right in here. And I just kept thinking, well, I guess it's going to go higher. And I waited and waited and waited and waited and waited. And that's what happens. So you just have to be patient. If you miss it, you miss it. And I felt like I was missing a trade, but I'm glad I didn't enter, because I would have gotten burned. All right, let me back out here one more time. I'm gonna pause at one. Okay, I want to put my lines back just so you can see it's a spike and a channel. It's a very weak channel. It's really going more sideways than anything here, but it's still working higher. And there's a couple of ways you would have wanted to look at this. First of all, you want to measure this leg and where we start up, which was right here, just in case. I mean, you know, we put these up here before and you thought they'd never get there, and it goes right there to the tick, or even a little past it. Didn't get there today, so that's not a good sign. It may mean it just tells you how weak it was. So it would have been hard to get there most likely with this channel, but sometimes this could have just been a midline here, and there might have been another equal distance between these two lines way up here, and we might have got there and made that target still. So you can't tell sometimes early in the morning. Just like I would have pretty much bet strongly that this was going to be a range day. Well, it did turn out to be a range day. Once we went higher, just look for that measured range move and consider this is probably a midline. And that's exactly what happened. And we come back, and where do we bounce? We actually bounced on this line, but it was heading back to here. So sometimes you just don't know. And I will say that this is a much more normal day in the ES, so it seems harder because we didn't really trend strongly, and we just went kind of sideways, and the resistance up here didn't hold like you would think it would. Even when it did hold some, you only got a little scalp or two out of it, and then we were going higher. But that's because it's a spike in channel, and it's an odd one at that, because you had a break down here. I mean, you could play it right here, but that doesn't account for why it bounces in here all along. So you have to say something's going on, and when you pull your line back up where you thought you would have had a break, it starts holding. And then you look up here, and you can see that midline there. Look how we turned down there. We turned up off of it. We turned down off of it, down off of it, up off of it, down off of it. I mean, you can see us turning up off of it all up through there. So it's definitely valid. So I believe that to be it, but it was hard to find because it looks like we already got a break in here. So you really couldn't bet on this again till here and maybe even here. If you didn't see it here, you probably definitely should have seen it by this point, if you're paying attention and re-looking at your chart every so often. When you're having a hard day and you can't, and it just doesn't seem to be doing what you're expecting it to be doing, you're missing something. So go back and double check it. So anyway, we got a spike up in the channel, but at the same time, look how flat that is. I mean, till right here, that's really where it started pushing higher again. And then it just kind of goes flat and then it pushes on up. But that's because you got the range here. Notice how it came back and just like you'd expect. Even if we're going higher, you expect it to come back and test that. So, but we didn't get our measured move here, but that would have been our target early on. The other target was these. Oops, wrong line. Notice you measure that leg and we started back higher here and you pretty much got a measured move up there. And then I would have used that same one here again. And we got another one right there. We actually went higher than that because that was the target, the range up here. But that would have got you on the right track. Where was it? Oh yeah. Notice this leg down, and then you would have looked for a measured move here, and notice you got that measured leg too. So that's just like a leg down. It took a few to get back up there and then a leg down. And there's actually, there's one, there's your measured move. And of course, once we went higher, I'd look for the next one, but we didn't get it because the range came into play there, that resistance up there. So, but once we first measure your range, and once you go higher, you want to always look at that one too. And that's really the one we went to it to the tick right there. I mean, exactly. So you could have had that. I mean, you could have really had that from this point on. So before 9 o'clock this morning, you could have known a possible target right there. And we didn't hit that till 2:40 or so. Just curious what time it did hit that. So it hit that at 2:50 and a second. So you could have had that target before 9 o'clock and had a good idea it was probably going to try to get there by the end of the day, and it did. And then the other thing, did I talk about why this sold? I think the other thing I want to talk about was why this sold off. Trader asked me, oh yeah, we did talk about that because we'd met the target. But the other reason is, notice that really it's a weak uptrend date. So most of the traders are buying and holding on. And so you've been accumulating longs all day. Well, around 3 o'clock, before 3 o'clock, all the day traders have to be out because they can't carry their trades overnight. So all the accumulated longs start selling. And because it was mostly long all day and they don't want to carry these trades over, they start selling and it just picks up the steam and all those sales start exiting. And so that's several different reasons why it does that, but that's two of your main reasons, because that was we'd met a target and we just came off the high side, so now we're coming back down to here. Of course, it found support here first and it ran out of time, but also all the buyers exiting their trades for the day, and so the sales start picking up, and then the shorts start seeing them too, and they start piling in, and then next thing you know, we're going down. So that's what causes that. But let's back out and talk about the trades and see if we can get done with 40 minutes today. There's not a whole lot of trades, so we should be able to make it. But notice what we got here. we had this resistance across here. We had from early in the overnight, and we're just kind of came down. We made a low, and we're just kind of slowly chopping up. You got a trend line, but you got a break, and you got a couple of legs up, and then you got this opportunity. You got a double test right there. Notice you made that eye. You test it once, you test it twice. That is an inside bar, and it's not a second entry. It really, on a bigger picture, it really is, but you got a little tick lower right there. But you can see that's, you got one leg, a correction, and then you got two legs in the next leg. And you may take that one. Generally, I don't like inside bars, but it's a double test. You know, it's a nice bearish bar. I think it makes a matching high, does it? No, I don't think it does. So if it was a matching high, you could argue for it to probably be red. But since it's not, it's just kind of an inside bar. But look how far away you are from the EMA on a double test. It's a little risky, but I just pointed it out. So most of you probably should ignore that trade. And of course, we're working down, and you get a break here. Notice you got a first entry and then a second entry, but look, you got a neutral bar before it breaks lower, and then it fails. And that's why you have to use your signal bar to filter these trades. But notice how it just starts going sideways. It's pretty clear right there that we're in a little trading range, congestion, and then it fails out the top. And so you got a failed breakout with a big bearish bar with plenty of room to get out before you get back down to the lows. That's a pretty good trade. Notice how it looked like it was going to fail, but it doesn't. And you actually, when it broke higher and turned down here again, you actually, if you weren't already in, you could enter there because that's a lower high. That's probably even the smarter trade because you don't have a second entry here. You guys have got a first entry, second entry, third entry, fourth entry. But it's the failed breakout and the big bearish bar that I like there. But this trade's probably even the smarter trade. And look, we met a failed second entry long, but that's a bullish bar, and you got to go short right into the support too. So not a very good entry. And you might have even moved this down at that point because it's starting to look like it's spread a little bit, but it still looks better right there to me. You still get more touches using the closes right there, or maybe even right there. So you don't get that touch right there. That's probably the best spot, and you can see where it comes back into play here too. But notice then you fell out the bottom. Your signal bar is too bearish. If you'd had a nice signal bar, it probably would have been just the opposite of this trade, because now you've got a double test off your lows and so forth. But you run back up and you get back in the range. You try to go lower. It closes in there and gives you a relatively bullish bar with plenty of room to get out. There's your good chance to get on. It comes back again, but now you don't have room to get out before you get back into those highs. And notice it backs up. It ends up going higher, but sometimes it doesn't. Sometimes you'll get stopped out, so it's not a good trade. But then we run up here and we fail out the top again. Well, we hadn't necessarily failed yet, but then you try to go higher once, twice, and so you got a failed second entry long. Notice how much room there is back to the EMA. You're probably going to at least come back to there or back even here, or you may even come back and get in the range again. So I kind of like that trade. I just marked it green. It's a little more advanced. It's a little aggressive. You got a second entry long right here. If you had this trend line on there and you saw this, you might take that trade because now it makes sense with the trend line there, but I didn't have that trend line on there. I'd looked at it, and when we went lower here, I just didn't fit, so I didn't like it, and I didn't put it back on. So it wasn't until we bounced off of it again that you had to realize something else was going on. Actually, when we kept turning down up here, you had to think something's going on up here. But this is when it really was obvious that this trend line was still in play. So, but if you saw it, you may take that. I don't like those 3-bar matching highs there. But there is a little failed second entry short. This is a second entry long. So that's another one. You might take it if you had that trend line on there. We run up, and there is a second entry short right there. Somebody asked me about that one. You could treat it like a failed break higher, and it is a second entry because this is a double bottom. So I don't have a very good signal bar, plus my trend line's still working up. That's a possibility, being that far away from the EMA and knowing it's probably going to at least come back to here. If you had a good trend signal bar, you might take it. But then we come down and we just start getting crazy sideways right here. Somebody asked me about this long. Notice you're coming down, you get a break, and you got a new high here. You're working down first entry, and then you pull back. And so that's a second entry long. It is off a key entry point. You don't have any room at all before those. You've turned down there once, twice, 3 times, 4 times, 5 times. So you've turned down there 5 times. So that's getting a little iffy. So what I'd probably want to do is wait and see what happens. And then you can see we're pretty much going sideways. You get a little failed break lower there. It's tempting to want to go long. You could treat it like a failed breakout, and we are kind of trending up. But I think you're better off to wait on the higher low to be safe, and that comes here, and it's right back into the resistance again. So you can't go long there. That's why I put those 2 arrows, just so I wouldn't forget to talk about that. And then you fell out the upper side. So you could even consider going short there, and it would have worked. But there's always a chance that it drops a few ticks, hits that EMA, and bounces. This one would have worked. I just think it's too risky since we're making higher highs and higher lows there, and the trend is kind of up at this point. And especially if we're going to the other side, it's up here. And that's what you got to remember. I was looking at this more like a range at that point. So right in the middle of the range is where you get all the failed second entries. And if you'll take the second entry and get trapped, and then you'll take the trap, and then that'll fail. Then you'll go back, and then that'll fail. And you just get chopped up, and you can see that all over across here in the middle. So you're better off just to sit tight until you get something that makes more sense. You can see this actually went over into here and here. And notice you're still kind of chopping around, but notice that new low, and when it bounced there, that's when I figured out the trend line. And you get a first entry short, you push through the EMA, and you push through this resistance up here, and you get a second entry short that fails, a relatively bullish bar. So now you got a trap to the short side, and you're looking for prices to go up, so you may go long right there. I like that one, especially after that big bearish move down, because you probably trapped a bunch of shorts right there. And this thing just takes off. And like I said, you're expecting, I started looking for a short myself right here, because that's the upper side of the range. I mean, if you come to this far right of the chart, well, maybe I'm going to get there. I don't know why this thing's moving so fast. But anyway, you see it's trying to get right there, and okay, you're looking, and it looks like, hey, we got, man, I have a failed breakout here, but notice that's an inside bar. Inside that, you got one bar. Really, all 4 of those are stacking up a little. They're kind of making higher highs and higher lows, but then you get that one right in the middle, and that's the one you got to be careful of, because it ticks lower and bounces right off the trend line and keeps going higher. So you just keep waiting and waiting and waiting. It just keeps going higher, higher. And then you got to, it looked like it was going to go lower, but your signal bar would have been this big bullish bar, so you don't want that. It just keeps going higher, higher. Now look, we got a bearish bar, and you might could get short right there if it breaks below it. But guess what? You probably want to wait on a lower high. Then you get a little doji. Then it breaks higher and turns and comes out the other side. So you might have considered going short right there, 1 tick below that, but I'd at least wait on this. And look how far away we are from the EMA. You got a double top. Now's the time you might go short. and then look at it. Goes right back to the EMA, bounces a little bit, but it even shoots on through there. And you do get that failed second entry long there, but you can see how that's, man. Let me see if I can do it this way. That's what that would have looked like. And again, that's an inside bar. Just like the one we had. Where was it? Somewhere over here. Right there. No, where was it? Oh, right there. And you don't want to make that same mistake going right into the EMA. It turns out it works this time, but you just don't know that. And what does it do? It comes right back to test this, exactly what you were expecting. And so definitely don't be going short right here into that. And it bounces twice. Comes back again. Now you got a double test. Notice you made that low. Actually, you had a double test right there because you originally tested it here. But I like the closer they are together, the better. When they start to get spread out, they're not as reliable. But notice you got a new high and you made a first entry. And so if it breaks back higher, right, and then it went lower again. So even though it didn't make a lower high, if it breaks higher right there, it's still a second entry long. So you get a second entry long, a double test. Look how bullish that bar is. And boom, off it goes again. And it's still trying to fail on the breakout. You actually had a second entry long right there, but this is your trend line. So you might have even gone long right there. It was good for a scalp. I didn't mark it. It's a possibility. Once it didn't take off, I definitely wouldn't have entered right there because now you got all that resistance across there too. You can see you would have had that resistance right there, and so you would have been going long into that right there. And then you draw your trend line and you can see it. And then notice that you're coming down first entry and then a second entry, and then you get a double test. But here what you get is you get a little failed breakout. It comes back and tests it. But notice this is a second entry short too. This is another one of those oddball ones. Let me make it bigger. I want to explain this one. But notice that low and you're moving down and you get a first entry actually. You get a first entry. And then prices turn back up and go higher. And then they're trading on this next bar and they break higher. So that's what I wanted you to see. And then it breaks higher and turns, comes all the way down and goes out the other side. So that's still a second entry short. It's a weird one. If you went to a smaller chart, you'd probably see it clearly, but the fact that this broke, came lower, turned back up, and then it broke higher and turned back down, we still corrected right there. It's just it just happened all in one bar. So it's still a form of second entry. And look how bearish that bar is. And where does it go? It goes down here right where you think it would probably bounce, and bounces, but you had enough room. It ends up going on lower. Then we get an overshoot. So now you got to be careful because an overshoot usually leads to a break on the other side. And I marked that trade just because you got, you're moving down and you try to, it's still two legs back to the EMA. Even though you went a little lower there, it's still a second entry. It's not a perfect bar, but we weren't back down here yet. And look how we're underneath that resistance. So you tested it once, you tested it twice, you came back and tested again. So that's a triple test. It's a lower high from that. If you had a really good signal bar, you'd really like that one. And then you can see it dropped on down right to where you were expecting it to go. It ends up just kind of going sideways in there too, till it breaks out and then it works higher. Now you got this trend working up. And that got us into the 2 o'clock hour. And this is a little bit of a repeat from earlier, but you can't really go. This is the only place you could go long because it's a, notice that you shot up out of here, pulled back, tested the breakout, and it actually broke lower and turned. You might go long right there. But once you got up here, then you're stuck in another little trading range. You do get a little failed break lower here, but the bar's too bearish and you're right back in it. And then these are just inside. It makes a higher low here, but not much room to get out. And that's the high of the day. So notice how it doesn't go very far and pulls back. And that got you in the 2 o'clock hour. So we ended up 50 minutes after all. So I'm going to wrap it up, but it's a spiking channel. It's really a range day. It's a combination range day, week trend up. And even if you didn't see this, you still should have seen the week range. It just would have been hard to explain why you're turning down in some of these places and turning up in some of these places. Of course, we go into these little range sideways ranges each time. And so if you just play the smaller range, it still gets you where you're going. You just would have expected once we got back inside here that it would probably come down here. And when it didn't, even if you didn't find the trend line working up, you still, well, let me just show you, you still had the support right here that we couldn't get through, and so it goes higher. So you still have other little clues there to help you. But anyway, I'm going to wrap it up. We'll be back again to do it tomorrow. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.